Right, let's take a look at the XY. Now yesterday I told you guys that I do want to see the XY to retrace higher before we see or look for a continuation again lower in the coming time. And as you can see, we have been with consolidation pretty much entire Friday, and the H1 inverse value gap, which I told you on NFP, if we close above, we can use that as a key level to frame longs into the Monday highs. Now, the Monday highs already got taken out on the NFP release on Monday. But even then, I told you, if we retrace into that inverse value gap, we can still expect price to use this as a level of support before we um, could expect lower prices. And as you can see, we have been consolidating on Friday as mentioned, and then tonight at Asia session open, we run this low, and then in London session we displaced higher on the H1, and then the session profile, Asia manipulation, displacement into New York London session open. What you expect is London continuation, obviously, if that's the bias. In this case, you can see we had London session open, saw a really minor retracement, and then we expanded higher. And by New York session, we already took out the NFP high. An NFP high, we consolidated above, and then if you compare this price action here, to what I've been showing you guys last week with my entry logic, the schematic, which I think everyone of you right now should have in mind what I mean. The bias here was still bullish, but if you had, like, let's say you had a bearish bias here, and for some reason you expect the price to turn bearish again after we have swept this high before we take out those equal highs right above. Also, bullish dealing range, bullish displacement, price engineered a weak low in New York session. And as you can see, this imbalance here, which we previously used as resistance on Monday, 2 weeks ago, 2 weeks ago, NFP as well, swept those highs, but again, resistance. Then today we closed above, took out the buy side of NFP highs, and then the expectation was to see price trading also above those highs into the potentially the daily gap we have now above us, right? Which is at the upper end of that weekly imbalance we have been looking at. Now, say you are bearish here, right? And you want to look for shorts for some reason, and you don't have that bias that price will continue being bullish, take out this high and those highs inside the opening gap, because the opening gap then became the most logical draw liquidity short term. So if you want to short here, right? Now again, you can view the H1 as your daily time frame here. Let's say we have a daily expansion here, and then we have daily consolidation, pretty much similar to what we have right now on Euro, right? Just on the H1. Higher, take out the high, almost swing high, and then price is retracing into dealing range. What it's doing, it's engineering a weak low, this one here. Price consolidates, builds liquidity above the highs, build lows, and then we see price quite late in the day running this low, consolidate, and let's say now you are bearish here, and you say, okay, I do expect the lower sell to form here, meaning we have double swept the highs in the lower time frames. Speaking now as a potential narrative if you are bearish here. You see, that's also why it's always so important that you have a bias. That's why I always preach to you guys, you should not trade a session if you don't have a higher time frame bias, because the bias itself will act as a filter for you to reduce the amount of sessions where you just go into the market and you don't have already a bias on the framework on the higher time frames. Because if you don't know what you want to see in price in the markets, you have no idea what you want to see at a session open, what would be your entry trigger, what would be your key level, and so on. But let's say now again, we simulate now with a bearish bias here, and we say, okay, we have doubles at the high, M5 change in order flow. We initiate a weak high here. We got now London session open here, and I expect London session close, open, high, low, close. We take out this high, and then we form the lowest sell here, and we see DXY reversing again. Even if you have all this bias or this narrative, right? You don't go in here and short this high with your stops above the high here, right? Because it's okay, invalidation, total soup entry of the lowest sell, and then I aim for, I don't know, this low here or that low. You can't use this entry here according to the schematic I showed you guys. Why? Because everything is too bullish, and this is a filter itself to not take those losses. Even if you think a low risk sell forms here, you are better off, as in the schematic is being said, and a video as well on YouTube, wait for price to trade above this high, and then wait for confirmation out of that high. And then again, you have the double confirmation. You see now what's the idea behind the double confirmation? It helps you to avoid those trades where you have a wrong bias or you anticipate a reversal too early and you don't get stopped out. Because now if you view this from a bullish lens, right, and we are bullish here and we expect price to continue being bullish, we say, okay, we have seen here consolidation in this hourly inverse value gap, accumulation, then we have Asia session, manipulation, we displace higher in London session, so we expect price to take out this high and then eventually that high by New York session if we don't already take that out within London session or London lunch. We trade higher and then you watch the H1. We see the H1 closing now above this H1 imbalance, telling us, okay, price is really bullish here. And do we still have some buy side levels intact which we have not taken out? Yes, we do. We have this high, that high, all resting inside or below the opening gap. So the most logical bias would be, okay, we expect here continuation of the bullish order flow as we still have not hit the overall target, those highs here. Meaning if we run below a weak low, we should view this as a continuation or for a level to look for continuation. Now obviously here, time of the day, time of the week is not ideal. I will also talk about this when I talk about Euro, because many of you guys have taken Euro shorts in not even London close, post London close session, and I also want to say something regarding that. But now you can see both biases, right? Or both narratives, bullish bias and the bearish bias. I really made it in detail so every one of you is able to follow up with the thought process, because if you understand this, you already have a way better understanding of price than 90% of people trading ICT on X, or even more, because they would see here sell side, buy side run, again sweep, and then they've watched the 22 model, they see market structure break, and then they want to short this because they only trade patterns without the overall context. If you're bullish, you would want to watch out here for longs. We got a key level, we got a weak low, so you would want to watch out for longs here. Right? Again, time of the day and price being overextended already. It's a Monday. I will talk about that in a bit. Just runs lower here. And let's see if we can get above this high. We sweep the high here. And now if you're bearish here, you want to say, okay, can we now displace lower here? Close, for example, back below this BPR here. Close below. And then if we get that, I would be short. Trades to the BPR. And you see, even if you're bearish here, you wouldn't have taken a loss, since price never gave you that displacement to confirm the low risk sell. Instead, you can see, now if you view this with a bullish lens, you obviously have here sweep, double sweep, then price forms a bullish BPR, price retraces in this bullish BPR here, and then expands higher. So you see, you can frame this here, the lower time frame price action can be framed in both ways, bullish or bearish. For both, you have a valid narrative according to whatever concepts you use, ICD concepts, market structure break, whatever. So that's also where I mentioned earlier again, it's so important that you have a bias before you go into a session. But if you don't have a bias, you don't know if you want to watch here for low risk sell, you want to watch here for a low risk buy on the lower time frames below this H1 low into the key level, you have no idea what you want to watch out for. So again, you can see bias was bullish because price run this low. I did not expect price to run all the way higher today because it was quite late in the day. But we had some Trump's news, I think, like tariffs or so. That's why we saw some volatility here. But this would have been the outlook for tomorrow if you wouldn't already have seen that move here. Look for longs from this inverse value gap and don't expect a large retracement. And that would have been the outlook for tomorrow. But we already got that move now playing out today. Now, for tomorrow, we're obviously trading here at the first potential key level to look for continuation lower, right? We also have still those highs here, which price could tap into, since we also have imbalanced price action above here. But as we have weekly imbalance, daily opening gap here, that's the first level where I would look out for a continuation lower. Now, the way how we trade here into the price, into this key level, is obviously heavily bullish, and I do expect price to trade above the Monday highs, today's highs again, right? I don't expect price to make the high here and now just reverse. Obviously, could be the case, but I just don't think the way we are closing here and trading the daily closure, closing above previous day's highs, or most likely above the previous day's highs. I do think we will see at least a run above the Monday range highs again, then potentially a Monday range play or some deeper continuation higher. And that has to be seen how much strength we will see above the Monday range highs. Now, obviously, we have seen here some large expansion in London, then also late in the day, meaning looking here for an immediate continuation higher. It's not really high probability, but at the same time, I also don't think we would run this H4 week low now here before we go higher. Like we have this H4 week low now, which we could technically run, and then go higher from here. But I don't think we will run this low if you're bullish and trade above the Monday range highs again. So I want to see how we're trading now here in Asia, and then tomorrow we have again no news, like no news at all. I think the first news are on Wednesday. But what I would look out for tomorrow for potential scalp longs on DXY is, as you can see, we got also this imbalance here now, which we previously used as resistance, which you also now closed above. Right, in New York session, London session initially, this was the resistance, now we got above, so that's now here an inverse value gap. As you can see on the buy side, we also have this bullish imbalance here. So we got PD area alignment on the H1 regarding this key level. Bullish key level and inversion key level aligning at the same level. So what I would look out for here, we got this low, this week low now being engineered, and if Asia is now being able to like consolidate here and not take out the Monday highs before, like we leave that high intact, then I would be watching out for here lower time frame range play below those lows, and then look for if we can get pretty much the same pattern as here, right? We trade below this low, have like some lower time frame M5 change in order flow. I wouldn't turtle soup buy this with stops here because that's an H4 week low, right? And price can still trade below here. So, but this is the first key level which I would look for continuation. But again, I would watch out here for this to develop, like trade with the low, lower time frame confirmation, and then long stops pseudo invalidation, and then aim for the Monday range highs. And you can see here as well the top of that daily opening gap. That will be my trading plan for tomorrow. Obviously, if Asia is expanding lower here or expanding higher above the high again, then that's not the case anymore. But as of now, after this large expansion, that will be the main plan I have in mind on the short term on DXY. Are there any questions on DXY? And also give me some feedback on how you how you like this explanation of today's price action and everything. I made it a bit more in detail than usual because, as mentioned, I told you if you understand this right here, then you already have a way better understanding than most people. Alright, then let's take a look at Euro. Also, again, something really, really insightful if you listen now. Yesterday I told you, the outlook, that since Euro was trading quite bullish into the weekly closure, that it could be the possibility, since we have run this low into the imbalance, that we could also see price running back into the range highs. But I told you, for that to be valid, I want to see price to close above this high with displacement. I told you, if we leave behind an hourly bullish imbalance, then this will confirm that price wants to run those highs and this high here again. The keyword is here close above with displacement, leading by an H1 imbalance. The reason why was exactly because of that reason. The XY was still trading in consolidation here, respecting this H1 bullish inverse or reclaim bullish value gap. And Euro obviously is trading in sync with the XY, meaning if the XY ends up being bullish, Euro won't be bullish as well. It will trade lower. And what we can see as well, this high formed in London session post NFP. So that's the NFP range high, right? NFP range high, NFP range low. Also, this imbalance here, which I marked out, you can see we never closed above. We had a weekly open above, but if you want to ignore that, the candle body is always consolidated inside. Price sweeps the NFP high, also not able to close above, and then this places lower to run the range lows. Then at what point can you expect price to be bearish again and look for shorts? Once price is closing below this bullish imbalance, which previously acted as support on the H1 here. I read here, sweep on the H1, bullish OB, fair value gap, even a BPR, price was respecting that, until we hit out, or we took out the NFP high, and then this plays lower again. This plays lower, we close below this bullish imbalance on this candle, which was in Asia. Also leaving behind a bearish imbalance, which indicates bearish sponsorship behind this move. So at this point, again, I wasn't planning on trading today on Monday, since today's Monday did not qualify for me for Trade Monday. I only trade Mondays, as always, if it's NFP week, which is not the case, and if I have a bias from the previous week's Thursday and Friday, which also was not the case. So today was a Monday where I don't even look at the charts, because I know based on my data, it's a low probability Monday, and it's not a day which I want to trade. But again, if I would have planned to trade today and I had a bias, again, I had no bias at the time of the weekly outlook, since price was in consolidation. But today, London session open, after everything that happened, which I just told you, I would have had a bearish bias and looked for a price to run back to the range lows, right? NFP range high, NFP range low, swap the high, H1 turn bearish, key level, meaning look for shorts from this inverse value gap as a key level into the low. And the question is only, how do you enter? Do you wait here for a lower type of confirmation setup, or do you just short this inverse value gap, stops above the high, and you aim for this wick here, right? 2R, something like that. Rejection block would be an easy target. I probably would have taken that entry as my first entry. Ideally, I would have looked for like a lower time frame high to get swept at London session open. That's also part of my playbook, according to the Forrester protocol. Also, completely new revised playbooks for everyone who got the Forrester protocol. They will be available in the group for free, obviously. So if you already have the Forrester protocol, you'll receive all of those playbooks in the Telegram group in the coming days. So we got the key level here, and then I would have looked for a London continuation framework, H1 manipulation, H1 displacement. Those are the criteria you want to look out for London continuation. And in this case, you'd only expect a minor manipulation at London session open. I would have looked for those highs here. They're resting in the fair value gap, or the inverse fair value gap. And I would have wanted to see price to run above this, or look for SMT here. I don't know if there was SMT between those highs or not. XY took out this low, 630. There we go. Oh, we also got this swing high, which I did not see. So we got this swing high resting below. So you would have here a lower time frame manipulation on session open. And you could have either turtle soup shorted this high, stops above the Asia highs in validation. And a second entry would have been a lower time frame entry, which would be on the M15. You can also use the M5 for the London session. I prefer the M15. I would have waited for price to give me an entry in this imbalance, to be honest. I could say now I would have shorted this fair value gap here, but I think if I were to trade this live, I would have waited for price to tap this gap here and then take this as my lower time frame confirmation entry to pyramid, move my stops to the same high at this point, and then enter here. So if I were to trade a session, I probably only would have gotten the swing entry here or the short-term entry, and I wouldn't have gotten the opportunity to pyramid here on a lower time frame confirmation entry since price only tapped the lower imbalance. Will the old Foster protocol will stay? Yeah, everything will remain the same. I will just add the playbook in the same group. Just additional content, right? I told you guys I don't plan on making a second cruise or so, because I trade the same. I only refine the system. That's also why I only keep adding stuff to the Foster protocol, and not make like a new cruise out of it, right? I could have also made a new cruise, but I would not do that because I know it's the same system, just more refined, since the Foster protocol obviously came out quite some time ago, and it's just a bit more refined playbook. Still the same playbook, but more stuff added, more criteria. So yeah, that would have been how I would have traded London session today. Beautiful Foster protocol entry, bias, narrative, entry, invalidation, lower time frame entry. Now we go to New York session, London close session. At this point, at New York session, right? Again, the New York session playbook would be, if we expect, or is the question is price overextended, yes or no? Second question will be, did we already meet or hit the 5-day average daily range? And the third question would be, is the higher time frame objective still intact? Which in this case would be the NFP low. And we can see we still had that low being intact, but out of all the other two criteria, those were not met. London was overextended. ADR for Monday already met by London session close. Meaning, yes, we still got this low intact, but that's low probability for New York session. And you can see New York session has been in consolidation or retracement profile. We retraced, consolidated, and then retraced into the H4 imbalance, which also gave a continuation. On DXY, we even hit the target already here on that move, so that low already got taken out on DXY. Now, obviously, price action, from a price action point of view, you would want to see price use the lower end of this H4 imbalance to expand lower and attack those lows here. But the question is, the next thing is, for a setup, we need more than just a bias. The bias is just step 2 of finding a setup. Step 1 is trading conditions. Do we have here high probability trading conditions on a Monday with no news, where Asia and London both have seen expansion? And then it's late in the day, even London close session came to an end when we saw the expansion. We hit that low already on DXY. We do know Mondays, especially no news Monday, once they hit the 5-day ADR, they typically retrace the entire move of the previous session. So it also would have been not unlikely to see price in London close to reverse back into the mid-range of today, since we already met the ADR. So ask yourself, is it really appropriate to look then for an M5 setup here in London close session? I personally would not look for a lower time frame trade here. Again, if you view this price action here, again, I told you I had still a bullish bias on DXY, so I would obviously overall expect lower euro. But again, DXY could have also shown weakness off of that high after we took out the NFP high, and still respected this imbalance above, and it being a Monday, and then gone for this low tomorrow, right? Also on the M15, right? Yes, we are still bearish here, and that's not a market structure break or a change in order flow. This just here is a stop run or a retracement into the H4 imbalance, and then you don't want to turtle soup by this low. Again, what I just told you here on the XY of the breakdown. If you're bullish here on euro for some reason, you do think price on euro will turn bullish before we take out those lows on a Monday, and you're bullish here, you don't want to go in here and turtle soup by this low with your stops here. That will not be a setup which is high probability. Why would you trade into a bearish H4 imbalance when the H1 and H4 order flow are bearish? You're just trying to call the bottom here. So it's way too early for longs. Also, did we hit any key level? No, we did not. Again, if you want a long, if you would for some reason want a long here, you would want to wait for a lower time frame confirmation below this low, meaning on the M5. Price runs lower. And again, if you short this here, let's say the bullish case would have played out. And let's say you short this here. I don't know, we have bullish M5 imbalance, you close below. And let's say you short the inverse value gap. Like that, right? Somewhere around here. Put your stops above the high and you aim for the low. What would you do if price runs this low and then runs this high again and then drops lower? That's what I was saying in the chat. Of course, everyone is only pulling out their screenshots of their shorts once price actually dropped lower here. But what would you have done if price would have run this high again? No one in the chat would have shared his trades. Everyone would be, I knew I shouldn't take this trade, blah blah blah. And that's the reason why you don't have consistency in your trading, because you always take those trades, which, yeah, you had a bearish bias here. The setup is also obviously fine with that context. But again, are the trading conditions here really high probability, especially time of the day? It's already end of London close session to look for an M5 entry after all the other things I just outlined. Large expansion, it's a Monday, we hit this low on DXY, ADR being met, blah blah blah. Not really. See, what we've done if price simply could have continued here and run this high out. He would have been fucked. I'm not saying this is a bad setup. It's a good setup, but again, part of taking trades is assessing trading conditions, like how likely is price to give a decent move here. I mean, you can be lucky that Trump announced some tariffs, which in this case played out in your favor. But let's say some other news come out which are bullish, and price just pumps higher, you get slipped, and you had a wrong trade. You know what I mean? Tomorrow, I expect at least price to run this low again. So I will be looking for shorts tomorrow. Now again, I don't think we will run this high, but we could run this high, so be open to both possibilities. We already tapped the imbalance here, so price could just continue being bearish. Again, I will use DXY, the trading plan I showed in DXY, as a reference for my decision. But those lows, right, the range here, the range lows, I want to see them getting taken out. And then also we got this H4 imbalance below, right? Do we trade all the way down to this H4 imbalance? I don't know, but that will be the main target. Those lows here, and then potential continuation into the imbalance below, right? And then we have to watch if we can set up for continuation. Like, The Monday range now being set, what would be nice this week if we can run this low, below the Monday range, and then develop a range here, and then get back into the Monday range, and then look for potential continuation into the Monday highs and the previous week's high. That will be lining up with a potential weekly narrative for this week, right? If we can tomorrow, Wednesday, then run the lows. We got the majority of news events on Thursday or Wednesday, I'm not sure. I think Thursday is the first one in USD. So if we get pre-manipulation on news like the days before, and then the expansion bullishness, the Monday range play, that would be definitely that's definitely a framework or a narrative for this week which I'm looking out for. Obviously, we have to see how price is developing here. If we just melt through here, then we have to obviously adapt our bias, but that will be seen once that's the case. Regarding entry level, same as on DXY here, we got this H1 imbalance. So it's pretty much the same plan as on DXY. If we can consolidate now and then run this high, then we're looking for shorts. Maybe SMT at those highs with DXY, I don't know. And if we don't get any reaction from that high here, and we just slowly go higher, then I would be keeping my eyes above this high. But to be honest, with the OB being here and this bearish imbalance, if we bearish and head for those lows, there should be enough manipulation to run into those lows here. So that will be the main key level I will be looking at tomorrow. Then DXY, into DXY pound. Again, yesterday I told you, as long as we respect this hourly imbalance, the pound is bearish. Also, this inverse strike on H4 here, you can see here, resistance. And then same thing here at the weekly open, tracement. Then we also went bearish on pound. Pound been trading a bit out of sync with DXY and Euro today. You can see here, pound was quite bullish post London session, retraced all the way back into the range. That's also what you could have seen on Euro easily. That's why I showed what I mentioned. A Monday with no news typically oftentimes retraces the move of London session and Asia if they are overextended in New York session, which you could have seen on pound here today, right? Asia, London expand, wait this low, and then price just retraces again into the daily closure and just continues to consolidate. Yeah, but pound, due to it being more showing more relative strength today than euro, I would focus on euro tomorrow. Also, pound already trading in the key level, tapping it multiple times in a discount. So I think this could be a bit choppy the coming days. And while euro still has a bit of expansion to go here into this low, I would focus more on euro since the low resistance liquidity simply more favorable to look for expansion. Take a look at UCAT. With DXY being bullish, I obviously won't look for shorts on UCAT here. Also, really bullish closure here today. You can see here we closed above this OB. So I do think price will retrace higher into at least the middle of that wick here, this daily wick. And I have to see what DXY is doing, if DXY is bearish again or whatever. But I don't expect downside from here on UCAT. Expecting more upside into this high and the middle of the wick. Gold. Now, the gold longs, where I told you I closed them last Friday, That's exactly the reason why I closed him, because I was already expecting something like that next week. We have not seen any displacement heading into the um, weekly closure below the NFP low, or not NFP low, below those lows into post NFP. Also on Friday, gold was not able to show any sustained bullishness below this low. We just consolidated the entire day, and then that's why I also closed my gold longs here again ahead of the weekly close. And yesterday I told you on gold on the daily, before I am really bullish again on gold in the higher time frames, I would like to see price to close above this down close candle to confirm a daily propulsion block, and then I would think we expand into the daily range highs. On a daily, you can see now we are still respecting this inverse value gap, but also the bullish value gap. So right now, same as yesterday in the outlook, we are still here a bit in a trapped order flow profile on the hourly. Right, we're still respecting the both bullish and the bearish key level. But the way we have been displacing higher from this daily week low, right, daily week low into key level. So if you view this as an H4 market maker buy model, then this could have been here the lowest buy. Right, again, keep the schematic in your mind, which I showed you guys. Reversal, lowest buy, and now we have seen price displacing higher. And you can see here we also closed above this H4, or not yet, but almost closed above this H4 fair value gap, and we left behind the bullish H4 fair value gap. Keep in mind we are still having daily on the buffers and this H4 one, so that's still heavy resistance here on the H4. But I will be looking tomorrow for longs on gold. Hopefully we don't have the same as here, we just open up the day and just push higher. That would be unfortunate. But I will want to watch for price. Let's make the daily levels gone again. If we can get into this H1 imbalance here, and then that would be the key level for me to look for a setup, right? Again, could you put limits here and take this setup? Let's put a low, then aim for the range highs. That would be a valid setup, yes, but considering we are still trapped between this daily, right, this daily fair value which goes below, and we got the H4 one here, I would want to watch, or I personally will wait here for lower time frame setup to form, and then look for longs in lower time frames. They don't want to again be stuck in the consolidation. In case gold, just continues to range here for the coming, I don't know how long, then I don't want to long this here and watch my trade consolidating here for ages, right? I will be more aggressive than with entries, turtle soup entries, once we can on the daily confirm the daily bullish scenario I showed you. Um, on the hour you can see here as well on the H4, we got back above this bullish value, so we reclaimed that one, leaving behind here a bullish H4 imbalance. So we have here again a high probability key level. But again, we now want to see follow up and price to also close above this one, which we have using as resistance now. And that would be the game plan as mentioned. I would want to watch for, this imbalance here lining up. If you can get down here for the daily low to form, and then that's where we want to watch for longs. And then the next level where I would look for more longs is if price can reclaim this fair value gap close above, and then I would look for more longs to form here. And then the daily, if we can even close the daily above, then we got the daily propulsion block here, which you then again can look for more longs, right? That will be how you align all the time frames now to position yourself in on gold. Any questions on gold? Could you inform us tomorrow if there's anything in gold? Like I always do. If price is trading the key level, I will send a chart update. Obviously, if I'm awake. If I'm sleeping, then that's difficult to do. But if I'm on the charts, yes, as always. Um, but yeah, that's pretty much all on Forex I am watching for tomorrow. Euro and gold. Those two are on my list for tomorrow. Um, and then yeah, I don't trade Bitcoin, but Bitcoin also looks quite interesting. We got this daily week low. We got a bullish chilling range, strong low, high, retraced, bullish OB. So I would expect or look for longs, more longs on gold, not gold. Bitcoin goes low, and then that could be potentially a manipulation to send Bitcoin um, back into the all-time high. Are you interested? London session? Yeah, as we have no news, neither in New York nor London session, I will monitor price in both sessions. If you flip the H1 OB and Vivaldi gap, would you then consider a long instead of usuals tomorrow? If I would say, I would have said it, right? So no. A plus setups, do you want to see H1's stop run into the key level? Or is M15 also valid? For what pair, euro, or what was it? Depends on what setup, you know. For New York, for an A plus New York continuation, you don't need a stop run on the H1. If there was one in London session, for example, already in that case. So it obviously depends on the setup. You can't just say H1 stop run is always A plus. That's not how it works. It's the reason you don't look for deeper retracement in a discount weeks. Why? I outlined the reasons was the H1 is heavily bullish, and you don't get deep retracement and bullish order flow. But yeah, that's it for today. And then yeah, talk to you all again tomorrow.